Good morning, everyone, and thank you very much for joining me. This is the morning market review. It is Monday, it's the 16th of October. My name is Russell Shaw, and I'm a senior market specialist at FXM. My email address is rshaw@fxcm.com. Just going to go ahead, bring up our disclaimers, and what we'll do is we shall start off with the high risk investment warning. I'll keep this on screen for a few moments. Good morning, Kim. Good morning, Raj and James. Nice to have you on the webinar. Thank you, everyone, for signing in this morning. Much appreciated. And let's just bring up the market commentaries disclaimer. Okay, excellent. And just finding our references, MarketScope 2.0 and TradingView. We'll bring up TradingView just to start with the yield. All right, so this is it's quite interesting. It's the yield splitting back, but you've got this big red candle on Friday. The yield has pulled back on Friday. If the yield was pulling back on Friday, it means that there was money going into the bond market. When I took a look at IEF, so I'm going to bring up IEF. I was quite surprised. It wasn't as big a candle as I expected. Remember, bonds have been really hammered, and there might be some value there. We've got a gap up after the start of last week, and this is a daily chart. It looks as if the EMA is about across bullishly. It looks as if the RSI is about a pop 50. Just to reiterate what I'm looking at here, bonds typically a safe haven. So given the conflict in the Middle East, money going towards bonds as the safe haven. As money drives into bonds, yields coming down. Again, I was quite surprised that we didn't have a bigger candle on Friday on the IEF, and the reason for that, if you just take a look at gold, I'm just bringing up the gold chart for Friday. There was a tremendous amount of capital that flowed into the precious metal. And you can just see last week's candle is got this huge blue candle up, and most of that's on Friday. If I change this to the daily chart, you can see that on Friday there was just this huge candle up, and a lot of I think market participants worried about the next stage of the conflict in the Middle East, which would be a ground conflict, an incursion into Gaza, and I think that's what we saw on Friday. But take a look what's happening today. There does seem to be some money moving out of the safe havens. In other words, I would suggest that perhaps we're going towards a risk-on day. Perhaps we're going towards a risk-on day. Let's just take a look and see what is happening on the dollar chart. Let's go through to the dollar, and I want to go back to the real rate as well. So moving away from IEF, I'm just going to go through to US 10-year, and let's just subtract the break even from that. Need to spell it correctly, and then we can, something's not right here. Here we go, that's better. Okay, so we've got this pullback, and let's see what's happening on the US dollar front. Okay, dollar does seem to be coming down. perhaps suggestive of there is going to be a risk on day. It's very difficult to tell just considering that big movement into gold on Friday. So let's just take a look at the weekly chart of the greenback. And we were looking for some sort of corrective price action here. It didn't manifest. It looked at one stage as if it was going to manifest. It looked as if it would get a reference candle reversal. We didn't get that, okay? But there is some red coming through on the greenback today. Let's take a look at the daily chart. All right. It is in zone 1 with some red. So it does make for a complicated start to the market today. If we're in zone 1, one would expect there to be a bullish bias unless it slips from zone 1 into zone 2, but we're not seeing that. In fact, if anything, we're seeing that we are in the bullish area. Given the fact that we've got this higher trough followed by a higher peak, Friday's price action is complicating things. I'm finding it a little bit difficult to incorporate that into the analysis. But I think what we do is we default through to the zone analysis, which is zone 1, go through to the hourly chart. All right, let's clean up here. Right, so the question now, we ask ourselves, are we risk on or are we risk off? I think if we're going to be risk off, then this S1 level needs to hold, okay? So now we're looking at levels to see if they hold. So S1 is a confluence of support. If it holds, what we need to see is we need to see the dollar EMAs turn positive, and we need to see the stochastic cross positively as well. If we get that, then I think that the market remains risk off. I think that the the next stage of the Middle East conflict, that would be the ground war, so to speak, driving capital perhaps into havens, the dollar being a haven in this particular context. If that is the case, keep an eye on the S1 level. Okay, that's scenario 1. Now, again, I want to reiterate, the price action on Friday has complicated things. If we're going to see risk off, okay, this is what we talk about, risk off. The S1 level typically should hold, okay, and we should see EMAs cross positively. We should see stochastic cross positively. If we're going to see risk on, this is in other words, the stock markets get supported. Then take a look at the stochastic. Stochastic heads further into 20 and holds in 20. If it holds into 20, then I think this S1 level goes. It doesn't hold. I think then we see the dollar move towards S2, and then we see a risk on. In other words, money flowing out of the greenback as a haven, going into stock markets. So a little bit ambiguous at the start of the week, and that in itself is not first price for us as traders. We want something to be a little bit more clear. We want clarity in what's happening at the start of the day. I'm finding it a little bit murky, a little bit foggy at the beginning of Monday. Asia came down overnight, but American futures seem to have some sort of support. So again, we caught in this sort of divergence of paths, risk on or risk off. I think for us, the key is this S1 level on the dollar. Does it hold or does it fold? Okay. Let's now just take a look at the risk side of the market, see if we can get some idea of support holding on a risk side of the market. I'll take a look at DAX, I beg your pardon, take a look at NASDAQ first, then I'm going to go through to DAX. Let's just take a look at NASDAQ first. All right, starting with the weekly chart here. And you can see, if we go through to the daily chart, as money piled into gold as the safe haven on Friday, NASDAQ pulled back. Again, I think worry about that ground incursion. If we take a look at this on a weekly basis, one of the ways that we suggested we look at NASDAQ was in terms of a pattern, and the pattern was the descending triangle, and it really was testing the upper border of that, but we don't have a breakout. We don't have a breakout, but at the same time, we don't have a breakdown. Okay, so we're caught in this consolidation pattern. Consolidation patterns almost like a temporary equilibrium. It's much harder to trade these consolidation temporary equilibriums than to trade trends, to trade breakouts or breakdowns. So, but there is some blue, isn't there? Some blue. So just as we're seeing some red coming to the dollar, there is some blue. Okay, the question is that going to give us a risk on, risk off? If we go through to the daily chart here, I think the ambiguity just gets highlighted. We have dropped out of zone 1. Now, let's just combine this with the dollar analysis. I'm going through to the hourly chart. I'm going back to the dollar because I really think the dollar is sort of what we focus on initially to get the idea of if it's risk on or risk off. Okay, it's all about that S1 level. Does it hold or does it fold? If it holds, okay, we have risk off. If it folds, we have risk on. So if we have that on the hourly for the US dollar, we go through to the hourly of the NASDAQ. Okay, and I think what we can do is we can keep an eye on the central pivot. If the dollar breaks down through that S1 level, I want to see NASDAQ push up. I want to see a positive cross on the EMAs, okay, and I want to see the stochastic make its way through to the upper quintile. So there's a dual analysis here. Keep an eye on the US dollar, that S1 level, it needs to break down if the NASDAQ is going to break out, break upwards, move past that central pivot, okay? So just trying to get some sort of clarity on what's starting out to be quite a foggy start to the week. But if the dollar S1 level holds and we see a bounce in that S1, a bounce from that S1, means money is going into the dollar. If money is going into the dollar, then I should expect to see the central pivot holding, okay? The central pivot would hold, NASDAQ would come down, and we should see a drop in stochastic towards the lower quintile, and that should be a risk off movement. I just want to stop there because I find this morning's analysis to be quite complex. Does everyone understand the theory, the hypothesis we've built up this morning? We're kind of at a fork in the road. It's either risk on, it's risk off. I don't know quite which one it's going to be, so we need price action to really guide us here, and we're looking at that dollar S1 level, and then NASDAQ as a dual analysis with it, just to get us off the starting block, just to get us, okay, this is risk on, okay, this is risk off. All right, Raj says he's okay with it. If anyone's having some difficulty with it, you must let me know. I'll try and really just emphasize it, but the idea here is we're starting off the week, in my opinion, in the fog. Starting off, unfortunately, in the fog. All right, let's take a look at DAX, see what's happening on the European side of the Atlantic. So let's go through, bring up our German 30 CFD, and let's try and get a directional bead there. All right, this is interesting. All right, and let's just do a top down here. I certainly don't like the weekly trend on the DAX. It looks really quite ominous. However, okay, let's just do an exercise here. Let's take last week's candle. And combine that with the week before candle. So this candle and this candle, and the way that we combine them, take the full range of the two candles. So we've got this long ranged candle, okay, and then what you do, where's the open? The open would be here and the close would be here. Open here, close. So we've got something like this, something like that, okay, and it actually would be, what kind of candle is that? If you combine the 2 weeks candle, you get a spinning top. Uncertainty in the market. So we've got this downtrend, but there is some sort of uncertainty coming in. Perhaps the way to look at it is bears starting to look uncertain. In other words, they haven't really been able to capitalize on this downtrend. Nevertheless, okay, we have broken down into zone 3, but we're on the border. And what's interesting, the start of the day does seem to be, okay, we've actually just gone past the cash open. Okay, it does look as if we're getting a bullish movement up here in DAX. It does look as if we've got a bullish cross in stochastic. If it makes its way through to the upper quintile, then risk on. Do a dual analysis. Go back to the dollar. Okay, go back to the dollar. And just see if the dollar is going to break that S1. I think for there to be a real underlying risk on movement, we should see S1 break. We should see stochastic hanging out in the lower quintile. Okay, so it's very, I think, insightful to do a dual analysis here. The breakdown in the S1 level. Take a look at DAX. DAX does look like it's got some sort of support. Its level to cross, we've got to see a cross of the central pivot. If it crosses the central pivot, take a look at NASDAQ, okay, which is very sensitive to risk on, risk off sentiment. Just take a look at NASDAQ. We should see some sort of positivity in NASDAQ as well. Okay, so it should, if DAX pushes above central pivot, I would like to see the NASDAQ push above the central pivot as well. All right, let's just take a look at gold just to see what's happening after such a spectacular move on Friday. Just want to see what's happening there. Okay. All right, so you can see it does seem as if funds are rotating out of gold, and I think gold, the way that I'm looking at gold now, was really, it was no doubt about it on Friday, a very strong attractor of capital in terms of being a safe haven, and I think that it looks like the safe haven flows are moving out of it, exiting, and if there's exiting out of havens, then I would expect the risk on instruments to have some sort of bid to it. Okay, any questions? So quite a complex start to the week, but we'll just play it day by day and we'll see if it gets clearer. Any comments or questions, please go ahead and type those in. All right, nothing coming through. So let us conclude at this point. All right, guys, have a fantastic day ahead, fantastic evening. We shall chat tomorrow morning. Thank you very much for joining me this morning. Cheers.